I
think you already did.
Yeah.
No, I've got autopilot's recording, so
Okay.
now our actual recording. And I'm going to keep admitting while I'm talking, so if you see me semi-distracted, but thank you everybody for tuning in. I think we had a ton of interest in this. I asked Kelly to do this because I have not seen anyone come out with anything. Randy, it sounds like, is the only one here, where we've been able to speak to a lender about how this whole thing is going to impact us. And I've actually had lenders reach out to me and ask me questions about it. And it made me think, well, you should be coming to us and telling us what we're doing with this, because we're all pretty confused, right? So I asked the fabulous Kelly Cort. Many of you, probably all of you, know who she is. I'm going to give you a little quick bio. Oh, and then I'm Heather Ruxberg with Real Broker and Be Epic Marketing. I co-own the marketing company with Kat, my partner. Her face is no longer on the screen. I don't know where she left because we got lots of people joining. But so Kelly Cort is the team leader of the Cort team at Guild Mortgage, and she leads a team of 9 professionals with over 200 years of combined experience. She's licensed from coast to coast, and that's how many of us know Kelly. She and her team specialize in relocation clients, investors, and vacation home purchases. Kelly is the creator of the Diamond Standard of Excellence, which is her system to ensure consistently exceptional worry-free experience for every buyer and every agent every time. And if any of you have ever worked with Kelly, you know, like, she and her team really, really, truly deliver. They do a phenomenal job. On a personal note, Kelly's a self-proclaimed crazy cat lady, who loves to spend time with her fur babies. She can't resist a sunrise or a sunset. Will stop listening to you if Freddie Mercury of Queen comes over the speakers, and she loves to travel and scuba dive the planet. So Kelly, thank you again for coming here and doing this. I'm going to let Kelly tell you guys how she wants this whole thing to be and how interactive you want it to be. I think it would be best if, like, everybody at least muted and started out that way to eliminate the background noise, because we have a lot of people on the call today. And I think, you know, Kelly, maybe do a hand raise would probably be the best thing. So I'll let you take it from here.
Well, first of all, thank you, Heather, and thank you everybody for being here today. Heather, I so appreciate the invitation. Pardon me, the tail end of a sinus infection. So apologies if I clear my throat. So many people are spinning out there about what to do.
Oh, you got muted.
Yeah.
There. Nope. Unmute.
Can you hear me now?
Yeah.
Got it. Okay. Am I still muted? No.
No.
Okay. So many people are spinning about kind of going backwards with clients that you've been working with for the past year who've been on the fence. How do we address this? And how do we go back and tell them, hey, you get to guarantee my compensation now? Well, it's only strange and awkward if you make it that way. So just know they don't know any different. These are changes in the industry. They're looking for you to guide them. People will follow the path of greatest conviction. You're worth every penny of it. So believe that when you come in and advocate for your compensation. So what if they don't have the money? That's why I'm here. What if they don't have the money? How do we one, make sure you get paid? Like, this is why we're here, is for you to either work with your preferred lender and help them understand how they can advocate for you and ensure you get paid. Or 2, if your lender's not willing to do it, please reach out to me. Kimberly's going to put a scheduling link in the chat. My production partner, Kimberly Kelly, is here. None of this happens without the great Kimberly Kelly. She is an incredible partner, only A players on our team, and this one keeps the wheels turning. So let me go ahead and share my screen, and I'll get to sharing what Heather and I created together. So, can your lender finance your compensation? Gosh, I just realized I put my screen on the wrong page. Hold on, let me change this. Sorry.
That always throws me off, just so you know, and I always do it wrong.
Okay. Are you there?
Yep.
Okay.
We see you.
Okay. Can your lender finance your compensation? like Randy said earlier, before many of you entered the room, is in creative ways. Yes, we can. What does that look like? Today, we're going to cover your compensation transparency. We're talking about it now. It's out in the open. It is dialogue that we're having every day. How do we finance your compensation? And what are the appraisal procedures that we need to be aware of when we're financing your buyer's agent compensation? So first, compensation transparency. You've got to ensure that your lender is sourcing your buyer's ability to come in with your buyer's agent compensation in the event you come across a property that they can't live without, the seller's adamant, they're not cooperating, your buyer needs to come up with your compensation. Now, here's what's really super important. Before you even introduce your client to your lender, be sure that your lender knows what you expect to earn on the high end of your buyer's agent compensation percentage. So if you expect to get, for example, 3%, but you'll negotiate down to 2.5%. I've heard several agents use these numbers. Of course, it's up to you. I'm not setting pricing here. Let's just make that very clear. We always want to be sourcing that higher amount, because I think we all know you can go higher and come down, but you cannot go back up. So be careful when you're establishing that initial buyer's agent compensation. Be sure your lender knows what you expect to receive. And let's just normalize this conversation. We've been doing it for a while now in anticipation of these changes that hit this weekend. And it's just a non-issue. Like I said, when we started, it's only weird if you make it weird. They truly will follow the path of greatest conviction. And we are singing the same song that you're singing, that this buyer's agent compensation, worst case scenario, is going to be X dollar amount. Let's make sure you've got it. And we can do that several different ways. One of the ways is, of course, cash money. Somebody who's got, 50% down, we don't need to worry about their ability to pay your buyer's agent compensation. Let's see, 1 second. Oh, where'd that go? Sorry, I just lost something. There it is. Okay. Hi, everybody. So there's a couple different ways you can do it. Of course, you can request a credit from the seller, but those, okay, let's talk about the listing agents that are buying the listings right now. By saying, oh, you don't have to pay your buyer's agent compensation. Has anybody run into that? Yeah, some bullies in your marketplace buying up the listings. Yeah, I know our dear, we have a dear friend in the Buffini community that there is a bully in her neighborhood buying up all the listings, excuse me. And these sellers refuse to cooperate. So the ways we can finance your compensation, as long as we know what it is adding it to the loan amount. They can certainly increase their loan amount, and we can finance that into the loan amount. Now, if they only have 20% down, then you're going to be looking at PMI. But hey, it's better to get into a property and pay PMI than not. And have your lender run these numbers, because I'm sorry, excuse me. As Randy said earlier, it's a nominal increase in their monthly payment. And at the end of the day, that's really where they're living, is in their monthly payment. So true partnership with your lender in vetting all of these different options is essential. Pardon me. The other way that we can finance it is, well, I think I already said it, get a credit from the seller. Now, there are some things you need to be cognizant of when you're getting credits from sellers, which are the interested party contributions and max seller credits. Let's see. So financing your compensation with conventional FHA, USDA, and VA, jumbo loans do not allow the financing of a buyer's agent compensation directly into the loan. Well, they might. It just depends on the lender. Jumbo lenders are so unique. So just work with your loan officer and your lending team to confirm that the jumbo investor will actually allow us to finance that into the loan amount. The loan type really does make a difference on how much we can lend and how much we can receive in seller credits. So down payment, occupancy type, all of that matters. So here's a grid that's a general max seller credit guideline to use. So for conventional loans, you'll see that with 10% or less down, we can get up to 3% seller concessions. Has anybody seen this before? Raise your hand if you've seen this before. Terry's seen it. Randy's seen it. Anybody else? I'm only seeing one screen. Oh, Susan's seen it. Jenny's seen it. Okay, great. If you haven't seen this, and Christine, I see you taking a picture. Nice job, girl. This is a great tool to know how much you can get in seller contribution. Now, buyer's agent compensation is not included in the max seller contribution. It's a concession. So concessions are enticements to bring a deal together. It's a little bit muddy the way it's handled, but if you have to get the seller to pay, let's just use this example, a $400,000 sales price, it's really only worth $390. You're going to offer $400, and the seller's going to give a concession of $10,000 to pay the buyer's agent compensation. Then that's considered a concession, and that could impact your total loan to value. So that concession will come straight off of the purchase price when it comes to loan to value. In those circumstances, the loan amount may shrink a little bit, but you'll still get paid because that concession is coming directly from the seller. They're still getting their price, but they're not receiving, they're not having to pay out your compensation. It's coming out of the net. Does that make sense?
I have a question. Can I ask, please?
Yeah.
So are you saying the contribution and concession are two different things?
Yes. A concession, it's a little muddy. So a contribution is straight up, okay, 400 grand, we're going to give you a credit towards closing costs. That's where the max seller contribution comes into play. It's literally the vernacular that's used. And you'll see this in the VA section, and Terry's got her hand up. I'll come back to you, Terry. You'll see in the VA section where on a primary, as we all know, VA can go up to 100%, but on the prepaids, the VA funding fee, the temporary rate buy downs, the excess discount points, debt payoff, and personal property, that is limited to 4%. But closing costs and market appropriate discount points are unlimited. So and you guys, every lender interprets this differently. So you have got a ride or die lender that's on your team, right? Everybody have that? I'm not seeing a lot of hands. Okay, well, let's schedule a call because every lender is going to look at this differently. So please have this dialogue with your lender. If you don't have a great lender to support you in this space, let's reach out and let's connect, because the way we handle this is on a VA situation, because we have this unlimited situation, there's all kinds of fluidity that is available. On a conventional loan, so back to a conventional loan with 3% down, if we need that 3% to pay the buyer's closing costs in its entirety, and they just don't have the closing costs or your buyer's agent compensation, you would then offer more for the property, and the concession, the enticement to bring a deal together. It's an enticement. It's different than a contribution. It's how do I want to say it? It's like a spiff, if, hey, I'll give you this if you do this. And it sounds like it's so confusing, but at the end of the day, it's just a negotiation over and above the black and white of the max seller contribution. And I know this is confusing, you guys. So Heather, can you paraphrase that back in your words?
Sounds to me like the way I'm understanding it anyways, and I could be wrong. That's why this is the most confusing piece to me. So we would essentially, I think in our board, we actually have two different addendums that state like if the commission is getting paid by like out of the purchase price, Cassie, you might have to chime in here. Cassie's on my team and she has done a lot of digging on this. But from what I understand it, if a buyer needs 3%, then we would need to be like, this is for closing costs and this other 3% is for a concession for commission.
Yes.
Okay.
And then that 3% for loan to value purposes only is deducted from the sales price. So what
Yes.
that means is the buyer's loan to value will go up, meaning their PMI might change, their monthly payment might change, their interest rate might change depending on their credit profile. Does
Okay.
that make sense?
Yes.
Okay. Terry, you had your hand up.
Yes, hi, thank you. I'm so glad you're doing this. Okay, so we all have different forms and different contracts. So I guess my question is how, I know how a closing cost credit is written in, how is a concession written into the contract on the offer?
So that's so interesting. So your broker is going to be able to direct you on how they want to see it in your contract, and your lender is going to interpret it the way they see fit. So here's what's interesting about lending, you guys, is every underwriter interprets the guidelines totally differently. So it's essential for your lending team to have your back and understand your intention. So going back to that original total transparency in the beginning, it's important for us when we package your client's loan to know exactly what your intention is. So you're negotiating like normal, Terry.
Yeah, we have one line and it's a closing cost credit. It's just one line on the contract. And so is it just a communication to you as the lender then?
Yes. So Terry, if you're within,
you do the package then that way.
yes. So yes, your lender partner has never been more important, you guys, to get you paid. I'll tell you that right now. So Terry, use that one line or whatever your broker tells you to do. And as long as you're within the max contributions, then it won't slip into the concessions conversation. Does that make sense?
Yep, it does. Okay. Thank you.
Great question. Thank you. So I'm going to go ahead and just share again. Heather, did you have any other questions before I start sharing?
No, I think the only thing I would say is, like, I mean, our board right now is coming out with a lot of new forms to make it very crystal clear. And if you haven't, dug into that, or even if, like, I have a friend up in Oregon and she doesn't have anything right now, she said, send me your form so I know what kind of verbiage I need to use. So, I mean, that's definitely something we could, share around, like different forms, but you just have to make sure you're in compliance with your own board. So
very true. Okay, quick, before I move on, I just wanted to, I'm going to stop sharing again. So has anybody, and I see your hands up, I'll come to you guys. Okay. Has anybody heard from their lender that a veteran, somebody using a VA loan, cannot pay your buyer's agent compensation?
yes.
Heather heard that. Terry heard that. Jason, Christine.
Mm-hmm.
Yeah. Anybody else hear it? Sharon, I see your hand up. Okay. In June, the VA created a temporary allowance for buyers to pay your buyer's agent compensation. I suspect this is going to turn into a permanent situation. This isn't going away, right? So when that came about, you are allowed to have your buyer pay up to an additional 3% over this 4% max. Does that make sense? What that means is buyer's agent compensation does not come into the max seller contributions. Now, again, every underwriter is going to interpret the guidelines differently. So it's essential that you have a great lender to advocate for your max seller contributions. So moving on. Now, before I get into appraisals, that's Heather, not Amy Chase, right? Heather, you got your hand up?
No, not me.
Amy Chase?
Amy. Sam.
Samantha. Oh, Sam. Gotcha. Hey, Sam, what you got?
You got to unmute. You're on mute, Sam.
Sorry. Wow. Okay. Sorry. I'm not in my office. I'm in Amy's office. That's why
hi, Amy.
Name's on there. But
hi, Sam.
So hi. Thank you for doing this.
You bet.
On this max contribution where there's limits, are you saying that there are no limits for concessions. Concessions could just be however they're interpreted as concessions, unlimited.
So loan to value is going to come into play.
Mhm.
So if you're at a 10% situation, then, well, yeah, actually, to my understanding, and Kimberly, maybe you could ping Jane and confirm that, but to my understanding, there are no limits to concessions. It's just going to reduce the sales price, therefore increasing your loan to value. Right? So Sam, it's an enticement to bring the deal together, which reduces the value.
So like if you're at a $700,000 list, but you want a $50,000 buy down and you offer 750, and that's basically just a wash, that's getting them, obviously it has to appraise for the 750. Is that a concession or a contribution?
That's a concession,
Okay.
as long as it's going to pay your buyer's agent compensation.
Okay.
If it's going to pay their closing costs, it's a contribution.
Contribution.
Yeah.
Okay.
So going back to, let's see.
And Heather, I don't know if you saw this, but like we've gotten a few different emails in the last 24 hours that Utah just updated our purchase contract.
Yeah.
In section 4 to add a commission, which is nice because we were having to do addendums before.
Yep, I saw that.
Yeah.
And that's nice too, because then I think you put your commission on that and then you write up an addendum asking for the closing costs. So you've got commission, concession.
Separated. Yeah.
Separated. Yeah.
Yeah.
So you would think that every board would put that into their contracts and hopefully they get on. I mean, I think that's the most cleanest, easiest way to do it.
Yeah.
Yeah. That was a great question. Thank you for that specific example, Sam.
Thank you.
Anne-Marie.
I kind of was on the same line as Sam. So, because in my mind, the way we've been now programmed to be thinking about it is all of it really are concessions or closing costs. It's all a concession of some sort, whether it's a rate buy down or 10,000 for a new roof or closing costs or paying my agent. These are the costs I have of getting into this house. So that what you're talking about, that little variance between concession and contribution, it kind of negates that a little bit. And I don't know. So I'm in California, and we're crazy out here. So we do have a line in our contract that says that we're asking the seller to pay the buyer's agent's costs as per the agreement and then you're supposed to present a document that backs that up, that we've agreed to X%. So, and then I suppose I'd write another term in saying, and we'd also like you to pay X for closing costs, or, for at this point, we're not in negotiations yet. We don't know if we're going to need, a new roof or what have you. So I'm kind of, in that sense, our contract breaks it out. But it's all concessions anyway. I don't know. I'm still having a hard time with this because we used to, we would put the closing costs on top, really was what we were doing before, right? The class was 400, give me 410, I'll write 5 to 410, give me 10 back. It's the same thing. So I don't really,
Yeah.
where's the, is it the lender's guidelines stopping us that we have to have a workaround? Is that why we're having a conversation?
Yes. So
Okay,
it's
so
the
that was a long
max
way to get
seller, it's the max seller contribution and how it's interpreted by the investor at the
So
end.
it's how to get around that, basically. How to get around
Exactly.
that.
It's just vernacular. It's semantics at the
This
end
whole
of the
thing
day.
is semantics.
It's totally semantics and it's red tape, but it's what we get to deal with. So just make sure you're partnering well with your lender, that they've got great underwriter relationships to be able to ensure your buyer's agent compensation if we're exceeding the max seller contributions. Now, the next thing is appraisal procedures. This is key, you guys. Do your homework, please, before you write your contract. Make sure that there are plenty of comps to support if you're going over to finance your buyer's agent compensation into the transaction. Have super strong comps, one, and please, if it's a 3-2, don't give a 4-3. That is not a comp, right? You got to understand if there's no other comps, then there has to be some significant reasons as to why you're using a non-comp as a comp to justify a higher value to finance your buyer's agent compensation. That said, an appraisal management company, also known as an AMC, as a solid partner with your lender is essential. And we have a magnificent AMC that covers the entire nation other than New York, unfortunately. And they're ride or die partners, just like your ride or die lenders. You've got to have a great lender with a great AMC relationship and arm your lender with these comps ahead of time. Now, some appraisal management companies will not allow the comps to be provided from a lender. As a matter of fact, we try to avoid it, but we can certainly allow you to have this dialogue with the appraiser. Just be prepared if you're financing and you're a little concerned that you've got some strong comps to go with it. The other thing is you've got these buyers who've been on the fence for a year. We're in the process of contacting everybody who's been fence sitting and getting them scheduled for a rediscovery call or a requalification call. Because if they were on the edge and now they are having to come up with your buyer's agent compensation, we want to make sure that the pool of inventory that's out there is as deep as it possibly can be, that they can look at every property that's on the market and you're not having to call every single listing agent to find out if they're cooperating with the buyer's agent. We need to requalify them to ensure that they have the funds to pay your buyer's agent compensation. And if they don't, can we finance it into the loan? That could in turn increase their debt to income ratio. It could in turn increase their willingness or decrease their willingness to pay that higher payment. Now, rates coming down is super helpful, by the way. Rates are finally coming down and let's hope they continue to. But we need to requalify your buyers. So if your lenders aren't doing that proactively right now, let us know if you want a second set of eyes on it. But I'm sure with all the effort they've put into getting these buyers qualified, they're going to want to requalify them. On another note, pre-qualification, pre-approval, and underwriting commitment letter. With the massive amount of buyers that are coming into the limited inventory market we have right now, ensure that all of your buyers are through underwriting before you write an offer. If your buyers are hesitant to allow your lenders to pull credit or insist on a soft credit pull or won't update their income and asset documentation, excuse me, that holds us back, you guys. We need your partnership. We need you to advocate for them being in the most ready state and provide all of their supporting documentation so that we can have everything fresh and we can write a super aggressive offer with short turn times if necessary to get the deal done. Okay, I don't see any hands up. Okay, any questions on that? No.
Yes, I have one.
Okay, Ann.
Hand raised. I always
Yes,
have questions, you know me.
Yes,
Okay, this is the piece, the appraisal piece that I have been wanting to know since all this started, and I've only talked to one appraiser on it. Like what? And I know every MLS is going to be different, right? But how are they going to be assessing the fact that in the past that $1 million home had a 3% or 2.5% or whatever percent commission, which really was a concession, right? Versus, because when they call us, they'll say, "Oh, I see you sold 123 Main Street. Were there any concessions on that?" "Oh yeah, we gave them 10,000 for a roof," right? So that's supposed to come into play.
Mhm.
What is their industry saying about this? How are they? Because that's
So,
really important for us to
great
talk
question.
about.
Yeah. Great question. So if it's customary in that area and most of the comps or a majority of the comps have concessions of some sort or contributions of some sort, vernacular, right, Anne-Marie? Then it's commonplace for the market to cooperate and include concessions in one way, shape, or form. So we see that on the appraisal, whether there were concessions. And if
But are they going to put, so for the homes that they're historical now, the data?
No.
Because I think in ours, there's historical data on that. So in other words, that $1 million house with a 3% commission is a 970 house. So Mr. Seller, you don't have a $1 million house. We were basically financing the buyer's agent costs for that. That's what that was. So you have a 970 house if you're not going to pay commissions.
That is a fact, you guys. So
So that's what I'm asking. Was the appraiser helping us out with this? Are they saying, no, you don't have a million, Jim, are they line iteming that for us? What's the
okay,
appraisal industry
Anne-Marie,
saying?
appraisals are more art than science.
I know,
And there's a lot left to interpretation.
but are
Every
they being
appraiser is
directed
going
as
to value certain things differently.
I know, but are they as an industry? That's what I want to know. What's their industry saying? That's the question
You
I have.
know, that's a great question for an appraiser.
Does
And an
anybody here know
appraiser
if anybody
industry
talked to-
leader.
Has anybody heard anything about that?
From what I've heard, they're going to be calling us and asking us if there was commission or compensation to the buyer broker offered once things start closing, because they are going to have to figure that into their valuation.
And are they going to look at what's already closed historically?
Yes.
That won't change, Anne-Marie. It's always been that way.
Well, not for commissions. They never counted commissions as part of it.
Well, I
Right,
think
but-
they'll have to call everybody though, because historically, the historical data is gone. So like anything from, like on our MLS, if I look back 3 months, it's gone. It's just gone.
They
So
don't
I
show
can't,
concessions?
So
the concession part's
Anne-Marie,
there, but
if I can, if I can
the
just chime
commissions
in
is
really
not.
quick, just because I know we're not far from each other as far as San Diego, is my understanding is historical information with commission, AKA compensation, is still going to be listed historically
Right.
in closed comps.
Right.
Moving forward, the listing agent has to fill out and answer the questions
Right.
so that then we just have to revert all the
Right. No,
numbers
it's-
and
it's a
figure out what the bottom
recorded-
line is.
Right, it's a recorded concession.
Yes.
So whether it went to a roof or buy downs or whatever, or agent costs, it's recorded as a concession. Again, though, I want to know how the appraisal, because if the appraisal industry has our back on this, it's going to make it a lot easier for us to deal with those sellers that are like, I don't need to pay that. Well, like, you don't have $1 million home. You have a
I have a thought. Heather, Kat, maybe we should get the head of our AMC on
Yes.
the webinar.
That'd be great.
Yes,
Kimberly, will you message Rick and see if he'll come on?
because I've been dying to know this for months and I can't get
And
answers.
if he can't come on today, I can schedule
Oh, it
another.
won't be today. Yeah.
Yeah, I can schedule in like the next one we could bring a couple of appraisers on here and just see how it's gonna work.
Oh, I'd love that.
Yeah, great idea, Anne-Marie. Well, let's get some answers from the horse's mouth.
Because if they have our back on this, that's going to make our lives so much easier. And
Amen,
it should.
sister.
It was always a concession.
It
Okay,
was.
that's my-
Can I-
that's
can
my-
I-
that's my soapbox.
Kelly, can I ask a question also?
Yeah,
A
Carol,
thought
go
that
for
I
it.
had- A thought that I had through all this, because you know me and like I'm about words. So for some reason, we're like real caught up in these C words: concession, contribution, compensation, commission, contracts, closing costs. It would be really good to have one of those little charts like you just did that is actually talking about all of those things, because there's so many of those words in the same sentences that I think particularly people with ADHD like myself get like I'm done. I'm not even listening to this anymore because there's too many C words. But they all have a meaning in this that can be utilized if we don't I think we have to make sure. This is one thing I'm really on right now, is not overthinking this.
Yes.
Because I don't think the appraisers even have the ability to overthink this. They're very linear, logical. And I think they're going to be living with the day-to-day experiences just like we are. They're going to make some mistakes. We're going to make some mistakes. And I think if we're armed with as much information as we have now, not information that's going to be developed later, I think that's going to be the best way for us to approach.
Yeah.
But I would really love it if you would do this
Yes.
definition thing. Okay.
You
thank
got it. We'll
That's
get
it.
that. We'll get that. Carol, that's a great idea, just to take some of the confusion out and to standardize some of the language.
Well, and we're also we can send out this max seller credit sheet to all of you that are on the webinar today, because we have that put together to email out in a PDF. So you'll have that too.
Thank you for that. And okay, Carol, you said it, overthinking.
Mhm.
And here's the thing, we all want to have a
I mean-
definitive. We all want to know what's expected of us. I'm an engineer. I need a blueprint. I want to know exactly what it's supposed to look like. And guess what? This blueprint is changing all the time right now as the attorneys interpret however your state is applying this. So it's going to be very, very different all over the country. And so we just need to get comfortable being uncomfortable with it and normalizing the language that here's how it is today. Of course, with the new landscape in our industry, this could change tomorrow, and that's okay. So Carol, Anne-Marie, thank you so much for overthinking and underthinking and requesting some definitions, because we're all doing it. That's why we're here. So thank you. Okay, so we talked about in July, effective for contracts written on or after August 10th, there's this temporary lift on preventing the home buyers using VA financing from paying their real estate agents compensation. We do ensure that, or this, of course, this ensures the veteran can remain competitive in today's ridiculously competitive market. This is subject to change. As you can see, it's a temporary lift on the ban. And so now I have been in several Zooms. Carol, on Monday, we were talking about your buyer's agent compensation, your buyer broker agreement with your buyer is a confidential document. And here's the hang up. Your lender might ask for it if your buyer is a veteran and they're paying your buyer's agent compensation. So you might want to run that by your broker now and confirm that you're allowed to release that to your lender, or don't overthink it and just do it. If your lender needs it to fund the loan, I defer to you, but I would say check with your broker. So a little bit more on VA. Who uses a lot of VA loans? I'm going to stop sharing. Okay, good. Many of you do. Great. Okay, well, it's a tremendous benefit for our veterans. Don't shy away from it. We get these veterans fully underwritten, and they are often extremely well qualified and super easy to deal with. They're on top of it, which we know is your lender's biggest challenge, is the buyer's lack of responsiveness up front, providing documentation. So don't shy away from using VA loans. Okay.
Deal, but we can't have so much big deals.
Hi, Liz. That was cute. Okay. So the loan amount exclusion does say that the payments cannot be financed into the loan amount, but we talked about how to go about doing that. So basically, this is just saying over and above 100%, we're going to actually need to have somebody else paying your buyer's agent compensation on a VA loan. Now, I doubt the majority of you are running into this, but if you do, that's where a concession is going to come into play. Keep that in mind. Okay, asset considerations, payments are considered when evaluating the veteran's liquid assets for closing. Now, keep in mind, this goes back to the original cooperation with your lender, and full transparency is before you even show them a house, you're referring them to your lender to make sure they can afford to buy a house before you show them a house, right? Every professional lender, every professional agent is getting a pre-approval before you're showing property. Allow us to reinforce your buyer's agent compensation. It is just normalized in our original discovery call with your buyers. And again, the VA does require that buyer broker agreement if your buyer is a veteran paying your buyer's agent compensation. Talk to your broker if they've been adamant about not releasing that document to anybody. It's going to be needed in VA. And again, collaboration, you guys, this is your lender is your partner, your true ride or die partner. They're the ones, hey, we don't get paid when you don't get paid. You know, if you don't close a deal, we don't get paid either. So like this, it is in our best interest to ensure that your clients upfront have every nickel to make this deal happen, including your buyer's agent compensation.
Kelly,
Again, yes.
I would elaborate on that just a little bit more, because you and your team are so, like, Kelly and I are working together on a transaction. And I just had a conversation. I just had a call with my clients like an hour before we got on this call. And we are going to get out there to start looking. So I had to tell him, I'm going to be sending you a buyer broker. This is what it's all about. And they said, oh, we already know all about this. We've talked with Kelly about it. And I will like plug David Sidoni, because he's got a great podcast, and they said we listened to one of his episodes. But because Kelly already teed them up, they were like, oh, we know we might not have to pay it, but we have the money and we're expecting to pay it in the event that the seller doesn't. And it was the easiest. I was like, oh, okay, great. Well, Kelly already, she had the conversation for me. It was the easiest call I had to have about them paying me a commission, and these guys are looking in the $1 million price point. So it's not going to be a small commission when I ask for 3%. So I just want you to elaborate on that, because I think it's so important that our lenders are making it very normalized, that it's almost part of their costs. It's not now just a down payment and closing costs. It is a commission, a down payment, and closing costs. And if you're really a lucky one, you're not going to have to pay the commission piece of it, right? And you're with it, and then you're with a skilled agent who's going to make sure that they negotiate the best they can. But I just wanted to throw that out there because Kelly's team does it so well.
Yeah, Heather, thank you for that. And who really taught me how to do this several years ago is Deanna Bone. She's been using the buyer broker agreement for years and years. And it was, you guys, I empathize with you. It was awkward at first, to bring up your compensation. But ever since she triggered me that way, I'm like, heck yeah, I'm bringing up your compensation. I'm advocating for it every day. And by the way, if you're struggling to articulate your value as a buyer's agent, please check out Brian Buffini's certified full service professional program. It's stellar. They've created some incredible marketing pieces. Yep, there's the link in the chat. They just had their first broadcast this week, and I just can't wait to dive into all these modules. It's going to be great. All of the marketing pieces, and Heather, I'm sure you've got your own spin on it with Be Epic, of the collateral pieces to articulate your value as a buyer's agent. You don't have to recreate the wheel. You don't have to get good at Canva. Just leverage the people who've already done it, like Kat and Heather or Brian Buffini, and go through the program to create your talk track, as I call it. Get the reps in, practice in the mirror if you're feeling less than confident. And you guys are all worth it. Every single penny. You're worth every single penny. So back to what Heather said, in our discovery call, one of the first things we bring up when we're talking about income, we're talking about credit, we're talking about down payment, closing costs, and what they have to use is their gift money. Are they leveraging a 401k? Do they have savings? What does that look like? Is there an inheritance, a lawsuit? One of those things that comes up, and it's not even part of the closing cost. It is, period. Like, this is worst case scenario. If the seller will not cooperate, here's what we say. Historically, sellers used to pay the buyer's agent compensation. Things just changed this year, and there was a class action lawsuit, but ultimately not much is different. What we are bringing into the conversation now is it's now up to you to guarantee your buyer's agent compensation. Now, there's still a ton of sellers out there that get it and understand and are willing to cooperate with your buyer's agent. But in the event you have to have this house where the seller's not cooperating with the buyer's agent, guess who gets to pay it? That's you. So how much did Heather say that she expected you to pay in her buyer's agent compensation? 3%? Okay, great. 3% of $1 million, that's $30,000. Let's try to find a house where the seller's going to contribute. But if you have to have this house, it's going to be 30 grand out of your pocket. And it's worth every penny. And then we move on. They get it. This is worst case scenario. We don't make it weird. It just is what it is. So reach out if you don't have a lender advocating for you. Did that cover what you wanted, Heather?
Yes.
Okay, thank you. Great. Excellent. Back to collaboration. So, adequately vetting your clients. You guys, we get copies of this documentation. We see the assets. As a matter of fact, when you request a pre-approval and verification of funds, we already have permission from our buyers to release their verification of funds, redacted, of course, without their account number on it. And with the pre-approval letter comes that verification of funds. So we're literally documenting these funds. Now, when there's gift funds, that's a little different. So when there's gift funds and they have a parent or a family member or a qualified individual contributing their gift funds, we do not have to necessarily document that up front. So if you're asking for verification of funds in those circumstances, because it's not a party to the transaction, it's gift, what we'll do is we'll draft an email to go along with the pre-approval letter. We personally will verify the funds, but we're not releasing that document to you of a parent's bank statement. So if you've got a seller who's twitchy, I'm really good over the phone in helping those sellers or their listing agent sell the fact that we've verified the funds. Let me know if you need help with that. Consideration of seller concessions with appraisals. You guys, again, super important that you're vetting the comps before you're writing offers if you're expecting to increase the sales price to pay your buyer's agent compensation. And under no circumstances should you expect a pre-approval letter that was created 30 days ago to still be able to buy at that level if you have not had the buyer's agent compensation conversation with your lender on it or your buyer. As a matter of fact, this is something that came to me as we were preparing for this webcast is we're going to send a message out to all of our pre-approved buyers with a video just saying, hey, things have changed in the real estate industry and your buyer's agent compensation is now your responsibility. Let's reconnect and requalify you to make sure that we put you in the best possible position to buy your perfect home and we don't have any surprises. And then we're going to include a link to get them scheduled with our loan officers and requalify all of that. We're sending that out today. Okay, Q&A, done. Yay.
That was a
Anybody
lot.
have questions? Great dialogue, great questions. You guys
Hey,
are,
Kelly, this is, excuse me, this is Randy.
hey, Randy.
Can you hear me? Yeah.
Yeah.
So one of the things that I think is really interesting is that one of the loan officer I spoke to as well says that when agents are going to present their offer, that we ought to present the offer with the concessions that states what the broker commission is for the buyer's agent so that you guys can run the calculations before the offer is presented so that you can see if the debt to income ratio is where it's supposed to be. Is that how you guys work as well?
Out the gate before you even consider writing an offer in our initial discovery call, which is why it's so essential that you have transparency around what you expect in buyer's agent compensation with your lender. Your lender needs to know in that first conversation, Randy, when you send a buyer our way, that is part of their closing costs. You know, Heather said it's almost part of their closing costs. No, straight up it is. It is straight up part of their closing costs. And it's part of our dialogue up front. This is worst case scenario. If you need to buy a property, you have to have it. Like this is the one dream home. Oh my gosh, we see this in our dreams. Seller won't pay. Okay, let's make sure you can. Let's get this house for you. Make sense?
Yeah.
Yeah, your lender that you spoke to, it seems very on top of it. You guys, not many lenders know what's going on.
Yeah.
It's crazy. Yeah, Terry, what you got?
Okay, so I feel like I'm in the same camp as Carol with the overthinking and with Anne Marie with all the questions, but I'm very comfortable getting a buyer agency agreement. I've got no problem with that. What I'm confused with is the verbiage. Like, I mean, I have no problem talking to them about, you know, that we might have to build it in or whatever, but it's the credit, closing cost credit versus concession versus contribution. Are they all the same? I mean, they're the same, but they're not, right? I mean,
So, you know, it's good that's the overthinking that Carol brought up. She wants a definition.
yeah. Okay.
What is a concession? What is a credit? What is a closing cost? What is a commission? What is
Contribution,
compensation? Yeah, all that stuff. Exactly. And it's semantics, Terry.
Okay.
At the end of the day, once we reach our max seller contributions, everything else becomes a concession. And what that's going to do is it's going to reduce the effective value of the property, increasing the loan to value, which could impact your buyer's monthly payment. Make sense?
Yes and no. Yeah. Okay.
Well, I love that you're overthinking it because we're those people. Anne Marie, you know, you guys are in good company. I overthink it too. And at the end of the day, every transaction is going to be treated differently until fast forward a year from now, it's going to be really super comfortable. And we're all going to have old hat and lenders are going to have their own overlays on things. We don't have hardly any overlays at Guild, but when I was at Wells, we had a crap ton of overlays, excuse my language. So every lender is going to handle it differently. But thank you for overthinking, Terry. What you got, Chris?
So I just want to repeat this back to you the way I'm hearing it to make sure that I'm actually understanding this correctly. On this chart that you gave us at the beginning of the Zoom call, the max seller contribution, what you're basically saying is that if we go over those percentage points in the farthest right-hand column there, then it is going to affect the loan to value of the property and basically change the amount that they're putting down if they're rolling in our commission as well. Is that accurate?
So it'll change their loan to value for pricing purposes. So in essence, if they had 10% down and you had to increase that to, or decrease that to 9% down to cover the difference in your buyer's agent compensation, because we've exceeded the max seller contributions, then they're going to go to a different rate for PMI. It could increase the points on their loan. So then we may even need to increase the LTV a little bit more to cover those costs. So it's kind of this sliding scale depending on the circumstances of the loan. But you got it right, Chris. You're absolutely right. Thank you for that. Okay, cool. What other questions? None? Awesome. Heather, we're gonna see about bringing in an appraiser panel
Yes.
on.
Yes, we'll see about bringing in an appraisal panel. I've got this document, but I have two of them. I need to get it in one and I'll get it sent out to everybody. So you all have a copy of it, but Kelly, that was fantastic. I just want to give Kelly a plug. If you have not worked with her, she is absolutely phenomenal. You know, I'm in Utah, she's in California. I have never, ever had an issue ever with her not being like boots on the ground here with me when she's helped me with my clients. It's been like just a smooth, phenomenal experience. So I just challenge you all to give Kelly a shot and try her out if you haven't, or even talk to her to see if it might make sense. But Kelly, maybe tell everybody how to get a hold of you and if they want to like hit you up to make a connection, how you want.
Yeah, thank you for that, Heather. So Kimberly, go ahead and pop that scheduling link back in the chat again, so it's handy and convenient. If you want to capture my cell, it's 707-694-4631. 707-694-4631. I have a team. My team is all coached, trained, and mentored by me. They use my system, the Diamond Standard of Excellence. We ensure a consistent experience across the board. It's going to be fun getting all of these buyers excited again with rates falling. So we're looking forward to reconnecting with the fence sitters, ensuring they've got your buyer's agent compensation in the event they buy a property where the seller will not cooperate because some listing agent bully talked them out of it. Now, there may be good times for a seller to not pay a buyer's agent compensation. And I leave that to you. I'm joking when I call them bullies, but there are some out there buying up the listings, you guys. And I'm sorry if you're in that market. Some of our dear friends are suffering that right now. So thank you very much for the opportunity, and feel free to reach out if we want to continue the conversation. Chris, you have your hand up again.
Yeah, I just dittoed everything Heather said. For any of you who haven't worked with Kelly and her team before, she's fabulous, and so is everybody on her team. And so for the clients that we currently have in common, you guys are going to be actively reaching out to them. I don't need to nudge them in your direction.
That's exactly right, Chris. And as I was having these thoughts, I really want to just say this, and I'm going to ask for your digital hand or your physical hand. If your lender reaches out to your pre-approvals from the last, really every single one of them needs to requalify you guys. So with a video that says, expect to receive a new form from Chris, and it's something that's new to the industry, every single buyer's agent needs to get your signature on it. It's absolutely normal. And let's go ahead and schedule our call. I'm going to workshop this a little bit, so my language is a little bit sweeter when I do the video, but expect to sign a new form with Chris. And let's just make sure you're still qualified to buy at that dream house when it comes into your purview. And does anybody have a problem with that? Raise your hand if you think that me telling them they're going to get a new form from you is a problem.
Some of us have already done that.
Okay, so good. Thank you for that. You may have already signed this, but if you haven't, expect to receive it, and I'll copy the agent on it too.
I think it just goes back to teamwork. We're a team just trying to accomplish this all together. And it's really not possible without the collaboration of the lender and having a really good lender that it's on the same page and saying the correct things to the buyer. So Hopefully we were like, if you're able to get your AMC on next month, then we'll bring you and the AMC back. I think in the next 30 days, we're gonna see a lot of, I think we're gonna see how things are gonna work out. And it's either gonna be really great or really awful or a little in between, probably a mix of all the experiences, but I appreciate you all coming on and joining and asking such great questions. If we can do anything for you, Kat or I over at Be Epic Marketing, we would love to chat with you about marketing pieces. And just thanks, Kelly, for coming on and doing so great.
My pleasure. Thank you for having us. We truly appreciate it. Take care, everyone.
Okay.
Thank
Have a
you,
good rest of your
Kelly.
summer.
Thank you,
Bye.
Heather.
Thanks, ladies.
Bye.